Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings guys, now let's take a look at the gold market. Here, yesterday we haven't got downside action that we have discussed. So we said that in general we do not see any corresponding performance on other markets. On the dollar we do not see any decreasing. On the 10-year bonds we do not see any downside action as well. And we have made a suggestion that probably for a long entry, since on the weekly chart market still holds this pattern, which is a pennant, potentially bullish, we suggest that probably we should get chance for better entry because overall action on the gold seems might be short term and actually not very a bit fragile. And now you can see what's going on. So here market start floating with the MACD line. And the pattern that we will be watching here is a bearish grabber, but we will know this only on Monday when this week will close, what will happen to this session. On a cross-market analysis, situation stands the same. So you can see, yes, there was minor pause. That's why, by the way, on the gold market we also saw an upward action. But today you can see yields once again turns up. So we do not have any more or less significant retracement on the yields for now. Market keep going higher. Now it stands around 4.6, and the same on the dollar index. You could see that market actually doesn't show any downside continuation, so mostly it stands around the previous top. Despite this reversal session that we've got, it goes nowhere. So this creates the background that not really supportive for the gold rally. Now if we'll take a look at the gold itself, on the 4-time frame chart, market just retested the same confluence area, 2640. And nominally, theoretically, this is the area where some bearish position on intraday charts may be justified, because we have bearish nominal trend on the daily chart. Potentially grabber might be formed. Market is challenging this confluence once again and showing the pullback down. Here we have unclosed cap, which is suggests that market could try to at least move somewhere back to the 2615, 2670 area to close the gap, and shows the reaction on this failed attempt to break this area to the upside. On the hourly chart, we could see that we've got butterfly instead of the triple to sell that we talked about yesterday, if you remember, suggesting that it might be some kind of the ABCD downside action to the 2603. So this setup has not been formed. And now market stands downward action. And the major question is, well, first of all, if you trade on the intraday charts and considering bearish positions, currently it may be already not as attractive because the nearest target will be somewhere around 2615. But anyway, this setup that theoretically might be considered. But for us, it is more important to decide what to do with the long position that we initially planned, where we should try to do this. This first moment. Second is actually market now keeps the bearish trend on the daily chart. And by all rules, by all meaning, if we trade not only on the weekly chart directly, we should not consider taking long position. So we should wait when the trend will change, and then try and take the position in some support areas. So some compromise maybe we could find with this strong support area on the intraday charts, because this hourly chart, because here we have confluence 2615, 2617 area, some trend line support and unfilled gap. So taking it all together, this creates an area that at the first touch should hold the possible bearish pressure. So when the market will for the first time will test it, so it should be relatively safe any attempt to go long range here. There's some bounce might happen around it. That should be enough to move stops to the break-even and see what will happen next. That is, there might be some compromise. Yes, it carries a bit more risk because we are taking position while the daily context remains bearish. But at the same time, with the strength of this level, it is not as risky as just buying somewhere else. Alternatively, as usual, most conservative approach is just do nothing, wait for a Monday, control the appearing of the grabber. If grabber will appear, then we should wait a bit more, and in general see whether the bullish context will survive, because as you understand, the appearing of the daily grabber suggests downside action back to these lows. So it might change the overall situation on the market. So but if early reversal was started and it will happen right from here, this also could bring some fruits. So that's actually the riddle that we should answer. So whether you would like to act in this way or not, but currently I do not see much more options for making the decision on the long entry. Either to wait for a month and see what will happen, or make an attempt to buy on this strong area, control the performance, move stops to the break-even as soon as possible, and then see what will happen next. So that's the only option actually I see currently on the gold.